Economists and financial experts predict that the Federal Reserve could decrease interest rates slowly over the next 2 to 3 years. This means that banks may start to follow suit by reducing how much interest they offer on bank accounts. Fluctuation in interest rates is a natural part of the economy. You can shore up your finances against the ebb and flow of interest rates by taking a few simple steps. I'm Chanel Bessette, a banking writer here at NerdWallet, and today we're going to talk about the different actions you can take to protect and grow your money when interest rates drop. I'm going to give you my 3 best tips for navigating a falling interest rate environment: shopping around for better interest rates, avoiding fees on new bank accounts, and potentially opening a certificate of deposit. Now, before we get too far along, keep in mind that we probably won't experience a drop in interest rates overnight. We saw some pretty low rates during the pandemic, but it isn't likely that rates will drop that far again anytime soon. Instead, we'll probably see a slow, reasonable drop in interest rates over time, possibly all the way through to the end of 2026. As rates drop, it'll become easier for consumers to finance big purchases like cars and houses, but we'll also see rates drop on other financial products like bank accounts. Even high-yield savings accounts might start to offer lower interest rates. My first tip is to shop around for better interest rates. Even if rates go down overall, you will still likely be able to find relatively high interest rates somewhere. Take a look at your local credit unions or consider opening an account at an online bank. These institutions are more likely to offer higher interest rates than national brick-and-mortar banks, and accounts are usually quick and easy to open. You're more than welcome to keep your old account open as well. You can simply move the bulk of your savings to the higher interest rate. Just make sure that you're meeting the activity requirements of your old account. Some accounts require customers to deposit a certain amount of money per month or use their debit card a certain number of times in order to avoid fees. And speaking of fees, the next thing you want to do is look out for fees when opening a new bank account. Regardless of how much you're earning in interest, you should always try to avoid bank account fees. This typically means avoiding monthly fees and minimum balance fees, both of which can eat into your overall earnings on the account. For checking accounts, this can also mean avoiding overdraft fees. Overdraft fees have become less expensive on average in recent years, but they can still be an unpleasant part of using your bank account if you incur them. And now for our final tip. Consider opening a certificate of deposit. A certificate of deposit, or CD, is a type of savings account. When you open a CD, you're guaranteed a certain interest rate for the full term length of the CD. So, if you were to open a 4% one-year CD today, then 1 year from now, you'd get your full deposit plus 4% of the total. CDs come in lots of different term lengths, from a few months to 5 or more years. So if you're concerned about rates going down, now could be a good time to put some money away and just let it earn interest. Just remember that you could be hit with a penalty if you try to withdraw your money before the CD term length is up. You can avoid these penalties by opening a no-penalty CD. When interest rates go down, it can be easy to become stressed out about what it'll mean for your financial future. But there are benefits and drawbacks to both high and low interest rate environments. And thankfully, you can look around for the best accounts and other financial services and products to help you with your goals. I'm Chanel Bessette, and I'm a banking writer with NerdWallet. If you're looking for competitive, high-yield savings accounts and CDs, head over to NerdWallet to check out our roundups of the best financial products. And if you feel like you learned something today, hit like and subscribe.